Hi, this is Kim Watson. Welcome to an Ezeetrader update on Monday, the 20th of June. So, what I want to do here is look through the markets, look technically at where we're sitting at the moment. Of course, we'll discuss Brexit, and again, we may look at what you may be doing later this week and during this week. But for now, I just want to do some bog standard technical analysis. It's pretty important not to let go of what's actually happening there. So often we have a big event happen, and all it does is basically run into some technical support or resistance. And so we should be aware of what the markets are actually doing. Now, I'm going to be looking at this in two different ways. I say two different ways. I'll look at the weekly, daily sort of, and also talk about some news, of course, that's coming out this week. So looking really firstly at the euro dollar, I'm going to just switch to a weekly view. Now, this is a chart that we've been looking at in the trading room quite a lot lately, and it really just pretty sums the euro up over, well, 2015 effectively and into most of this 2016 today. We have been sitting there kicking around this sort of supply area. Every time the euro does push back in towards that area, it does seem to see selling coming in, and that's regardless of what news. Now, of course, the Brexit thing, it could be blamed for some things more recently, but overall, this is a sort of a big picture analysis of the euro, and it does do this. It does sit in relatively tight ranges for long periods at times. This is no different. Now we seem to be obviously this key area around about the 14. Well, around about 14.14. It's probably a bit higher than that. 14.40, maybe 1.115. Oh, sorry, 1.15 even. Somewhere in that region is obviously key to. I mean, if we can get a weekly close above that sort of area, I'm sure we can be shoving up. At the moment, there seems to certainly be selling coming in. However, it looks on the dailies. It sort of pitches up there, runs into resistance and rolls. So May was no different. We saw it running up towards its monthly R2, and it failed. Where we're sitting at the moment, well, there's a gap below. Most of the market's gapped throughout the Asian session here, and looking at this, it just looks to me that it's failing into its midpoint here. It's got a potential to come down and close that gap. Looking at it this time in the evening, when I'm recording this at around about 5 o'clock, 5:30, it's not the best time to be looking to take the short on this, but it could be that, well, we'll see how it runs. It may just fill the gap and give us a bit more of a clue for the rest of the week. Chances are, and I'm very much expecting it to be pretty range bound. I don't expect to see much happening outside this range over the next few days until we've got Brexit out of the way. And of course, come that sort of time, we could see a lot of volatility. But we've got to remember the banks are going to step in on there anyway. They've already given their reassurances. So looking at cable, and it's all sun and roses. Let's look at the weekly basis. And it is getting close to a trend line that I've got on the weekly. It's just run back into that trend line at the moment. A break of that this week, well, could be positive or partial through this week. I wouldn't be surprised if we see some abnormal volatility kicking in and moves kicking in over the coming days, leading into Brexit, whether it be yes votes, no votes, whatever it could be. As I was speaking in our room earlier on today, the move that's occurred through the Asian session was already pretty much on the cards there. We started picking it up from Thursday. Friday just sort of followed through, and well, we've continued in that mode. It was already suggesting that it was leaning back towards the stay vote, may well get it. So it's being priced in the market, and at the moment it's risky pricing anything into this market in a sense. For us as retail traders, we can only look and sit on the sidelines at times. But for now, this has been priced, or the stay move is starting to get priced in probably more firmly. We shouldn't ignore the gap. How long can it be before a gap gets filled? Well, it can be quite a while, I guess. I've not actually measured to see what the longest gap was and whether it got filled within day, week, month, or whatever. But gaps often do get filled, so I wouldn't be surprised if during this week's volatility, this does get filled, it'd be expected to almost. However, not guaranteed. If it carries on pushing up like this tomorrow, if we still see more stay votes coming through leading the polls, then the chances are it'll be pushing in till Friday. And of course, what could happen if that was the case is it could have already moved most of its stay. It may have another pop and then drop back to where it technically was moving. Now, technically, where is it moving? Well, as I said, we've already, sorry, I've just gone down a time frame instead of up the time frame. Technically, well, it's looking like it's trying to put higher lows in. It's doing its best to put higher lows in there. So if it can break these prior highs here, this 1477 area, we could see further upside. Okay, dollar yen. Well, it's continued to strengthen from a weekly perspective, and it's again pushing back down now. Although it did again another gap that we saw. It's almost looks like it's just going to continue in this mode. At the moment, there's nothing obvious in terms of the potential for it to change direction. I was looking for divergences. Yes, it may have got a tad oversold and some, but not my oversold indicators. Certainly not overbought, oversold indicators. Certainly not picking up on it at the moment. We've had sort of pretty good signs before from this, and signals it quite well. Signal cable last week in terms of being oversold here. Unfortunately for me, it just pips me out 2 days later on that one, but the signal comes in quite well, and we're not seeing that at the moment. And to me, it just looks like the trend's a friend that it could be running down towards the monthly S2 or even the monthly S3 at this rate. Looking in at the Aussie dollar, we've seen some gains made on the Aussie dollar and the Canadian dollar, of course, because of the oil prices affecting, as it's running back up to this sort of $50 barrel. But to me, the Aussie dollar, it probably, well, this weekly chart does it a favour, I think, more than anything else. But the question I've got for it, and I'm looking, is whether it's going to sort of roll over from here. Is this a sort of a bear flag that we're seeing here, or is this something of a bigger move that may run up back to these sort of prior highs, back up to the 80 area maybe over the coming weeks? From the data for the week though, I think we could be consolidated pretty much and sitting. I mean, for the last 2 weeks we've been in a tighter and tighter range, it looks like, and it could be that we just sit in that tight range. From a daily perspective, as we come down here, possibly looking marginally more bullish in terms of what we're seeing here. But if we can break the highs from the 9th there, well, it's putting in higher lows and could push on. As I say, the oil price has improved and helped it. Canadian dollar, well, let's come out to the test to the weeklies first, and the overall again looks like we're sort of sitting in this. That was a bear flag, and it looks like it could continue to the south side here. If we're looking at this bigger picture here. So that's the bigger picture from the daily point of view, maybe a bit more range bound, and it could. This is my favourite sort of aspect for it. It could well be sitting somewhere in this sort of range for a while. If oil sits around its range where it's sitting in, this could do a similar basis and just run into a range, and it's worth just flicking to oil and seeing what's going on there. And it did make quite some gains towards the end of the last month, but we've really been sitting in that, gave away quite a lot of them. Big increase on Friday, and it's just seeing that follow through a little bit, but unless it already rams off, I think the Canadian dollar will, as I say, become a little bit bound within its range. But we'll see. Stranger things have happened. Okay, that's pretty much those markets. Now, just coming back to the pound, I might as well bring the picture into play as we're looking at this. And just bearing in mind what's going to be happening this week in news as well. We will have some more polls coming out, of course. I do not have a list of polls and when they're going to be released, and I would expect there to be more and more polls as we lead into Thursday. So that's to be expected. Looking from news out this week, there are quite a few news stories due. say news events due, should I say, coming through this week. Um, Starting really, there's nothing there today. Tomorrow we've got the Australian monetary policy meetings, etc., which could give a bit of a kicker through the Asian session. I'm sure the Brexit would get mentioned. In fact, I'll eat my chocolate hat if it doesn't. Just get myself out of that one. Later on, we got Fed Chair Yellen testifying and Draghi speaking at 2 o'clock actually, and then the Fed Chair Yellen speaking at 3. This is a regular monthly or regular event that the Fed Chair talks about the current state in the US. It's already using content that's most likely already out there, so I wouldn't expect major moves from those 3 o'clock briefings. Testifications. Okay, with Draghi speaking, likewise, he's probably said it all. No doubt they'll all use talk about Brexit. And then, of course, we lead. There's some other data, such as retail sales, that get a little bit coming out through the week. French and German flash manufacturing and the European flash manufacturing index, they moved very little on Thursday, and I think the markets may well chop along leading to Thursday and, of course, Friday morning. What happens on Friday morning? Well, if Brexit occurs and then the outvote wins, the central banks will be stepping in. Will you be able to trade it? Probably not particularly easily. There may be opportunities coming in by the time we get up on Friday morning to be doing some trading, but there may be some big flash moves already occurred either way. Many brokers, one warning to take into account, I was hearing from one of the bigger brokers that we deal with, and they were talking about be wary of people trying to hedge the markets, get into positions for a hedge with stops and things. These could be absolutely wiped out, these accounts where they're doing that. They don't want to get stuffed by it. They're not going to get themselves stuffed by it. Everyone's running for the exits in terms of looking at not being into any position, I would imagine, apart from cash wherever possible. They're putting up margins, or the brokers, if your broker's not increasing margins, and they probably will do spreads as well as we move in towards Thursday. I'm shocked, and if you're working or trading with a broker that hasn't increased the margins, I'd be very suspicious of their ability of remaining if they get exposed or their clients get exposed to the major risk. So I'd be very, very careful there. So people ask me, well, how far could it move? And I haven't got a clue. And it's like how long is a piece of string? Something significantly I mean, we can easily see 400 or 500 pip moves. I've seen it in the past with the Swiss situation. It's very possible. Whether it be positive or negative, can I put orders to try and trap it? As I said, they're very risky. So often we see huge volatility with some of these moves. I'll give you examples in terms of what people may be trying to do. They're effectively taking either side. They'll be looking at the either side of the points and putting orders here. But the spreads, we don't know what they do. They may just widen here. It may spike up, get into this trade here. Get you long and then fly over and get you short. So there is absolutely, I mean, it doesn't matter how far you put that away from each other. By the time things have happened, you could be losing money. I think Charlie said last week, cash is a good position. It should always be remembered it is a good position, and it may be that fear of losing out may cost you more than anything else. I would sit there and hold fire personally. Anyway, that's it for me. Hope you have a great week, and Brexit is kind to everyone. Bye for now.